guys, it's Stock Curry, and in today's video I've got a stock pick for you. We're also going to talk about the earnings that are coming out on Tuesday, and I've got an update on the US economy, including where we stand with inflation and future interest rate hikes. So let's get into it! Let's get things started with our US economic outlook and what it's going to take to bring inflation down. Unfortunately, Fed rate hikes alone are not going to bring inflation down, as long as the government continues to spend money. Remember, this is what got us into this problem in the first place, was significant government spending and printing of a lot of money. So until that stops, and yes, it is still happening, until that stops, inflation is not going to come down no matter how much the Fed raises interest rates by. In order to fight inflation, it requires both monetary policy from the Fed as well as constraints in fiscal spending from Congress. And unfortunately, Biden's student loan forgiveness is going to raise inflation and cause budget risks, as it adds $400 billion to the federal deficit. So unfortunately, fiscal policy has not been constrained, and this continual spending of government money is causing an inverse effect to the higher interest rates that the Fed is doing, and the net is that inflation is just not going down. And inflation might actually be worse than what's being reported due to something called shrinkflation. 64% of consumers are now worried about shrinkflation. Shrinkflation happens when consumer products get smaller in either weight or size or quantity, while their prices remain the same or even go up a little bit. Because of this, food prices and the prices of many consumer products appears to be fairly similar or just a slight increase, when in reality the inflation is much higher because the quantity or size or weight of that product is now much smaller for the same price as people were paying before. This forces people to buy more of the same product, and that is causing a significant burden on consumers, even if inflation doesn't appear to be rising. And unfortunately, economist Stephen Roach says the worst is yet to come. He says the US will need a miracle to avoid a hard recession. Remember, we're in a paper recession right now. A hard recession, or a real recession, would be when the job market starts to fall apart, when unemployment starts to skyrocket, when businesses start to report significantly lower profits and earnings. And in fact, we've already seen a lot of that already start to take place, but the job market hasn't quite taken an effect yet. Once the job market and we start seeing employment start to rise up, that's when we know that the economy is about to enter a pretty bad recession. Now, even though things are about to get worse before they get better, I do want to encourage you that things will eventually get better. Mortgage rates are expected to fall down to 4.5% in 2023, according to an estimate from Fannie Mae. The reason Fannie Mae is saying this is they think the Fed is going to have to continue to raise interest rates in order to fight inflation through the end of this year and beginning of 2023. But then Fannie Mae thinks that the Fed is going to lower interest rates as we enter a recession, and that is going to help stimulate the economy once again. So that's why Fannie Mae thinks that mortgage rates are going to drop back down to 4.5%. All right, that's all of the economic news. Let's talk about the earnings that are coming out on Tuesday. Before the open on Tuesday, we've got Best Buy and Baidu. And then after the close, we've got CrowdStrike, ChargePoint, and Chewy. And speaking of earnings, did you know that you can find upcoming earnings as well as listen to conference calls directly in the Moomoo app? To get earnings and conference calls in Moomoo, first update your app, then click on Markets at the bottom, and then click on Today under Earnings Reports. Once you do that, you will see the major earnings that are coming up this week, and if you click Show All, that will show you all of the earnings for that day. And one thing that's unique about Moomoo is that you can click the calendar icon, which will set an alert reminder for when the earnings call comes out. And if you see the word live over the icon of the company, that means you can watch the earnings call live. If the earnings call is already passed, you will see a little play icon. You can click that to listen to a repeat of the earnings call. Just press the play button on the video. That will allow you to watch the earnings call. You can also comment and read what other people had to say about the earnings call. And if we head back to the earnings calendar here, there's a filter button at the top right. If you click that, you can actually filter the earnings down to only show you the earnings that are either in your watch list or just the earnings for the stocks that you hold in your portfolio. And if you click this little rotate button or just rotate your phone, you will be able to see the major earnings for the entire month. And then if you click on a particular day, you'll be able to see the earnings for that day, and you can very quickly click to other days on the calendar. So overall, with all of these incredible features, I feel like Moomoo is by far the easiest way to see what earnings are coming up and to set reminders for upcoming earnings so that you don't miss any, as well as being able to actually watch the earnings calls directly in the app. I also love how you can filter out the earnings to only those stocks that are in your watch list or only those stocks that are in your portfolio. It really helps clear up the clutter and makes it much easier to focus on the earnings that are important to you. If you want access to all of these incredible features that are in Moomoo, make sure you sign up for Moomoo before the end of this month. Because if you do, you're going to get 10 free stocks if you deposit $100 or more, and 13 free stocks if you deposit $2,000 or more. You can take advantage of that and get access to the incredible earnings calendar by using my link in the description below or going to stockcurry.vip/Moomoo. That's stockcurry.vip/Moomoo. And if you're in Singapore, you can get access to Moomoo's earnings calendar as well as get a free share of Amazon by going to stockcurry.vip/MooMooSG. That's stockcurry.vip/MooMooSG. And if you're in Australia, you can also get access to Moomoo's earnings calendar as well as get up to $50 free by going to stockcurry.vip/MooMooAU. That's stockcurry.vip/MooMooAU. I want to thank Moomoo for sponsoring today's video. It allows me to produce this video without putting any advertisements in it for you guys. Now let's get on to the stock pick that I have for you. But before we do, I just want to speak to those of you who have been investing for less than 2 years, the beginners in the stock market. Because what ends up happening is you first start investing in the stock market or trading or whatever it is you're doing. What happens is your emotions start to get involved. And very often you can get emotionally attached to a stock, especially when you hear these YouTubers that are saying things like, oh, the stock is going to the moon and you're going to get your Lambo next year if you just buy the stock and hold it. And it's just all these things that quite frankly aren't true. And it can cause people to become very, very emotional. And I want to point out what happens if you do get emotionally attached to a stock and just provide a little bit of a warning to try to stay as neutral as possible when you're investing in the stock market, to trade based upon the technicals or the fundamentals, and not to get emotionally involved. Earlier this year, people became very emotionally involved to Digital World Acquisition Corp, or DWAC. And the reason is because it was a SPAC linked to Trump's social media platform. The stock ran up to insane valuations, and at that time, I warned people that I would not be investing into DWAC because it was trading at more than 10 times its fair valuation. Now the stock is falling as shareholders weigh a delayed merger as well as numerous lawsuits and other issues surrounding Trump's social media company. Late last year, people got very emotionally attached to DWAC as it ran up to over $130 a share. Since then, it has fallen considerably and is currently trading at around $25 a share, having fallen 8% on Monday. This is why you never want to get emotionally attached to a stock. I am convinced there are still thousands of people who bought this stock above $50 a share who are down significantly and are still holding on to it because they're emotionally attached. Remember, this is a SPAC. Its fair value is $10. That's it, $10. It is still trading at 2.5 times its fair valuation. If the merger with Trump's social media company completely falls through, as it might, this stock will fall back down to $10. So trade based upon the technicals and the fundamentals, and don't buy stocks just because you get emotionally attached to the underlying company or because some YouTuber says it's going to the moon and everybody's about to get rich. It's just not true. Stocks will always eventually fall back down to their fair valuation. All right, that's my warning to you. Now let's get into my stock pick. I saw this article today in the Wall Street Journal that says the Ukraine war is depleting the U.S. ammunition stockpiles, sparking a Pentagon concern. The level of one type of combat rounds in storage is uncomfortably low, says the defense official. So this got me thinking, whoever the company is that the Pentagon buys its ammunition from is probably about to see a significant boost in demand from the US military, and the stock price could rise significantly as well. So I did a little bit of searching, and this is what I found. The ammunition for the U.S. Armed Forces is manufactured by a company called the Lake City Army Ammunition Plant, or LCAAP. The Lake City Army Ammunition Plant is owned by Northrop Grumman. And it just so happens that Northrop Grumman is a publicly traded company, ticker symbol NOC. And what really interested me about this stock is the fact that despite the fact that we're in a bear market and most stocks have tanked over the past few months, NOC has continued to rise. So NOC is my pick for a long-term hold stock because I do believe NOC will continue to perform well as the U.S. military replenishes its supplies that they gave to Ukraine to fight the war. Now again, I do want to stress this is a long-term hold stock pick. This would be one that I would buy and hold for a minimum of 1 year. This is not a stock that I would try to trade short term. So please don't come back to the YouTube comments tomorrow or a few days from now asking me if NOC is still a good stock to buy. The answer will be yes. This is a long-term hold play for more than 1 year. And the last thing I wanted to let you know is that you only have 1 day left to sign up for the VIP Discord. We continue to hold a Peloton vertical credit call spread, which is a bearish position, and that is currently up 70%. I plan to hold this until it expires on September 16th to get the full 100% profit on this credit call spread. I also bought an Amazon put option today, which we're currently up 10% on. If you want to potentially see profits like this in your portfolio also, then come join us in the VIP Discord where I post all of my trades before the trades are actually filled, and I also explain why I'm buying those trades so that you can decide whether or not you want to join in or perhaps wait out for a different trade. We also have other coaches in there who are posting their trades as well, and we are absolutely killing it in the VIP Discord. If you want to learn how to trade options or do technical analysis or fundamental analysis, all of the training is free of charge in the VIP Discord once you are a member. It's just $25 a month, but you do have to sign up before the end of this month. After the end of this month, the VIP Discord will be closed. I will not accept any more signups. We are switching to a new system where you will have to apply to get in, and also the prices will be going up significantly. So if you want to lock in your spot for life at just $25 a month, you can sign up at stockcurry.vip/getvip. That's stockcurry.vip/getvip. Alright, I hope you enjoyed this video and got a lot out of it. Don't forget to hit the like button and subscribe. And if you're on YouTube, click the bell icon and click all so that you can get notified when I release my next video. I hope you have a lot of success trading, and I will see you tomorrow.